Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zacks, and I have a top stock pick for the week. It's March 10th. That means we're 1 week away from St. Patrick's Day. That's why I'm in such an early festive mood, mostly because I'm not going to be doing the top stock picks next week. So I had to get a chance to show off my great shirt, my wonderful Irish flag. America first. Ireland and a few others second, and everybody else last. Okay, let's go to my top stock pick, shall we? Here we go. It's Rubrik. Rubrik, not to be confused with some other stocks that have a similar sounding name and terrible accusations against them. But it's RBRK, and it's Zacks rank number 2. That's a buy, and it's got what I love to see in my growth videos, a strong growth divergence, a strong growth style score, A, and a weak value score, F. Now, this is one of those security and data collection, managing data across the platform, right? So the security cloud, trust security platform, and that sort of stuff. That's what this company does. Now, this is one of these software as a service names. And over the last several months, the idea has been AI is just going to destroy this area. But I'm not really that sold on that idea. I think we've taken a big time haircut on this stock, and I think we're ready for a bounce up. All right, we got $11.4 billion market cap, awfully liquid at 3 million shares on your average volume. And we're going to report earnings 2 days from now after the market closes. So this could be an actionable idea. Let's take a look at the numbers that we always love to see. Are you beating the number? And the answer is yes, and they're beating it handily. As you can see, 53%, 55%, 90%, 158%. And the important thing is they flipped to profitability there. So we've got good earnings history. We're looking to potentially make money again because it looks like they sandbagged the heck out of these estimates. If you're beating this much, they're telling Wall Street to keep it beatable, and Wall Street responds by not really even moving estimates for this quarter, minus 11 cents. Next quarter, going to lose 7 cents, but for the full year, really for the Zacks rank, it doesn't really mean too much on the fiscal year of January. So next fiscal year, they're projected to make money. This is actually a down arrow, which is probably why it's a 2 and not a 1, but that's okay. We've got earnings coming up. Let's take a peek at the growth, and then we're going to go look at the valuation. All right, so here's our growth numbers. 1.28 billion in sales. That's 44%. That's a big-time grower. But next fiscal year, we're looking down to just 22% growth. I'd like to see that number move a little bit higher, but you're starting to feel that pressure of, the law of large numbers for a company like this. All right, so let's go to our valuation. It's absurdly high, 2,400 times forward earnings. That is crazy. An NA on price to book and price to cash flow, and 9.5 times sales, awfully high. But you're getting good growth. You're getting 48% growth, and your margins are obviously improving as we see the company went to profitability last quarter. So good things to keep on your mind here. So now let's take a look at the chart real quick before we start to celebrate St. Patrick's Day. Green arrows. St. Patrick would love it himself. But then obviously here we've got this AI question. Are we all going to, roll over and let AI take over the world? I don't think the answer is yes. And certainly not now. Maybe some years down the road, there could be some developments. But for right now, I feel like a good earnings report, a beat, and this stock could start to head back to, maybe that mid 70 range if we have a good earnings report. All right, that's it for me. Happy St. Patrick's Day is coming up next week. Let me turn it over to another Ish. I'm Irish. Tracy is Polish. Tracy Reining, take it away.
I thank Brian for throwing it over to this non-Irish young lady. But I like to celebrate as well. Don't have my green on today like he does, though. That'll keep for next week. But I have a completely different stock. It's also a Zacks number 2 rank for some reason our ranks changed overnight, which does happen. That's just a reminder about the Zacks rank system, how it works. We run the algorithm daily, so the Zacks rank can change on you daily and can, especially during earnings season. But that doesn't make both of these stocks not top stock picks. Both are number 2 buy stocks. It's just they're not in that more recent elite group of the number 1 strong buys. But Brinker, the stock I'm bringing you today, should still be in the number 1s because it is basically crushing it. Let's take a look at what the numbers look like, why it's a top stock. And that's hard to say right now in the restaurant industry. A lot of the restaurants are struggling right now with rising costs, rising food costs and pay for the labor side. Then we have the GLP-1s. Then we have affordability issues. So while their costs are rising, can they push that through on the menu? In some cases, they can't. They're getting pushback from the customers. But Brinker has been very strategic. It operates 2 chains, Maggiano's and Chili's. It has 1,600 restaurants in 29 countries. Yes, you can eat at a Chili's outside of the United States. It's great, isn't it? And everybody is. Chili's is the brand that is driving Brinker right now. Its comps are up again in the second quarter, which they reported back in January now. So we're getting closer to the next quarterly report here with Brinker. That's probably why it finally fell from the number 1 to the number 2 as those earnings estimates get a little bit older. And we get still some companies reporting recently that are newer. So this is common for the Zacks rank. Again, it doesn't make Brinker any less of a great stock. You can see on its style scores, it's got B for value, A for growth, C for momentum, and an A overall for the VGM. And then just scrolling down, we can see that its earnings surprises have been good in recent quarters. And then you can see on the earnings side, it's looking pretty good. But that's because Chili's keeps surprising. Now they have this special value menu now at Chili's that is really resonating with the consumer. So the consumer is being very picky on where they're going to spend their money because it has gotten expensive to eat out in restaurants. So if they can go somewhere where they feel like they're getting more bang for their buck. I don't know about you, but I've talked with, my family and friends a lot. Every restaurant we go, hey, that seemed very affordable, or hey, that didn't. And I'm going more to the ones that did seem affordable, where I wasn't paying $100 for breakfast. And Chili's is hitting that good area. Now, Maggiano's not so much. Its same store sales were down 2.5% in the last quarter, whereas Chili's were up 8.6. So overall, Brinker had a 7.5 same store sales. This is very high because they have done 19 consecutive quarters of same store sales growth. That's very difficult for restaurants to do. Now, what does that mean even? What is a same store sales? They are looking at the same restaurant over, had to be there for at least 18 months. And so these aren't the new stores. Those tend to do real well out the gate because everyone goes out to try it. Oh, it's something new in the neighborhood. These are ones that have been around for a while. And it's very difficult to grow those sales year over year for many years. But they've done it for 19 quarters now. They're taking that same Chili's that's in your neighborhood and they're pushing it up. Now, some of it comes from pricing on the menu. So if they raise those prices, they can raise the same store sales. But just because you raise the prices doesn't mean anyone's going to show up. So you need a combination of, if you're going to raise the menu prices, also you need more transactions, people coming in and then buying some of those higher priced items, and maybe even, buying the drinks, adding on the desserts. These little things are what adds up for a restaurant chain. So let's take a look at those detailed estimates. Why did we have the number 1 rank and now it's a number 2? Detailed estimates is where I go on Zacks.com, and you got to scroll down. You can see the sales estimates there. Then we get the earnings estimates. We have nice 20% earnings growth expected for this year, another 15.3 for next year. They did just report the second quarter, so we're looking at third quarter already. So 2027 is in play because that'll be the second half of the year. And now looking to see why we had the number one rank, and now it's just number two, but this one estimate higher here in the last 7 days is very bullish. We have two in the last 30, one for 2027 in the last 30, and then all of these in the last 60 days were from the January report. We do have one lower here, though, in the last 30 days for next year. So that's the only real kind of negative thing. But some of that is probably because, and then one lower in the last 7 days, actually, is because this one analyst went in and said, hey, I'm a little bit too light on this year. I'm maybe too optimistic on next year. So I'm going to cut there a little bit. But it's not a big deal in the overall situation. We have 1068 looking for 2026. That's up from 1061. Then we have 1231. It is down just 2 cents in the last 7 days. So that one estimate has pushed it down just a little bit there. And you can see it there. So I'm very bullish on a restaurant chain that is able to do what Chili's is doing. There's been a lot of questions over the last couple of quarters when it's had like double-digit same-store sales. How is it doing it when all these other restaurants are struggling? Well, those changes to the menu and being a value proposition during this time of affordability is really pushing it. And I'm sure they're trying to run that with Maggiano's as well. A little bit different customer there, perhaps, with Maggiano's, and not as successful at reining in that value proposition on that end. But Chili's is proving to be still affordable night out on the weekend when you just don't want to cook. And so we'll see if they can continue doing that throughout the rest of this year. But brand is strong, even in 29 countries strong. So this is Brinker, ticker EAT, easy to remember, and I'm keeping an eye on it and all the other top-ranked restaurant stocks as we move forward throughout this year. And be sure to subscribe to our YouTube channel to get all of our top stock picks of the week so that you get all of these Zacks number one strong buys or number two buy stocks as we move along. Be sure to subscribe, give a like, give a thumbs up for us here on these videos, and we'll see you again next week with some more top stocks.